So Tim, when Peter Schiff says a rug pull, explain to us what that means.
Okay, so you have the Fed and the government. We have a debt, and the way we cover the debt is we sell bonds. We sell bonds to the world, and then that money, the proceeds go towards covering the debt and other things that we need for the economy. So this has worked great for 40 years. Rates have been coming down. People buy the bonds. Everyone's happy. But about 5 years ago, roughly around the COVID time, things changed, and now we've got interest rates going up. And believe it or not, we've got people around the world are now buying actually more gold than they are treasuries. So it's a big problem. And when countries start to shy away from buying treasuries, we aren't getting the funds in to pay for the debt, and it creates a bigger problem. And that's where we're at right now. And it's just growing rapidly. And if you go back to the 70s, is a good example, a big picture view. In the 70s, we had a situation where interest rates were rising. We had higher inflation. The dollar was weak, and it was very, very positive for gold and silver, of course. Same thing's happening all over again. We've got the Fed has a choice. They can either lower interest rates, and that's going to create more inflation and maybe a stronger economy, or they can raise interest rates, let rates go up, and that's going to just crash everything. And they don't want that. So what they're going to do, even though they're going to let interest rates come down, and it's going to be inflationary, it's very, very positive for gold and silver, very negative for the debt. They're going to let that happen because they don't want the economy to crash. So it's a perfect setup for higher gold and silver prices.